welcome. You're watching the Business Today show for market closing. I'm Sakshi Batra. The show is presented to you by National Stock Exchange. This is where we get you all the market closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Markets rally on positive cues from India-US trade deal. Details as well as strong global markets. Sensex jumps 400 points to near 84,000, while the Nifty rises 160 points to around 25,850. PSU banks and metal stocks lead the gains. Export-oriented stocks rally after India-US trade deal. Textiles and shrimp firms gain in trade, including Gokaldas, Raymond's, Welspun, as well as Avanti Feeds. Shortly, Rajendra Gupta, Trident chairman or Emeritus of will be also joining in to discuss the impact of the deal. Moody's sees India's GDP at 6.4% in FY27, fastest in G20. RBI rate cuts likely to modest. Also, banks remain resilient despite some MSME stress, with loan growth strong and well as margins set to improve. India's largest bank, State Bank of India, shares surged by over 7% in trade to record high levels after Q3 net profit jumps 25% year-on-year to over 21,000 crores. The bank also raises FY26 loan growth guidance to 13 to 15%, while brokerage houses also lift the target prices on strong performance. The first Land Rover Evoque rolls off the brand new Tata JLR assembly line in Tamil Nadu's Ranipet. The 9,000 crore rupees project will now produce luxury and electric high-end vehicles for the group, capacity to be ramped up to 2.5 lakh units in 5 to 7 years from the current 10,000 units. Quickly looking at how the markets are trading in the last 20 minutes of trade. The Nifty hovering at 25,875, once again inching to the day's high point. We are 0.7% higher in trade after having seen good volumes across the board buying in trade today. All the sectors of the Nifty are up and about, led by gains in media stocks, 4% higher. PSU banks, 3% higher. Small caps, over a 2% uptick. Real estate, metals, you name it. All the sectors are up and about in trade. On the Nifty, you have gainers like State Bank of India. We pointed that out to you, 7.5% higher post the Q3 numbers, as well as brokerage houses updates. We're also looking at Shriram Finance, Grasim, Titan, even Dr. Reddy's as among those gainers. Anywhere between 3 to 7% kind of gains can be seen along the stocks. When we look at the losers at this point in time, you just have about 8-10 stocks that are on the losing end as far as the Nifty is concerned. Max Healthcare is one, down by 3%. NTPC, ONGC, you also have ITC and ICICI Bank as among those top laggards in trade right now. But let's quickly welcome our guest on board. Avinash Gorakshakar, founder of Avinash Mentor Research, is now joining in on this program. Warm welcome to you, Avinash. Good to have you with us. For the last 1 year, we've been discussing about the India-US trade deal. When is it going to happen? Finally, it's happened, and the contours are also out. And we are given to understand that this week itself, the tariffs will be brought down to 18%. We are also seeing a reflection across the street and among those export-oriented stocks and sectors right now. How are you looking at this development, and what do you think is in the offing for the markets post this deal?
No, I think Sakshi, you rightly pointed out that the US trade deal was awaited for a very long time, and I think now with the deal signed, the import tariff coming down from 50 to 18% is going to create a lot of buzz and excitement and positivity for the export-oriented sectors. You know, companies from the auto component space, the pharmaceutical, textiles. Typically these are the sectors which are going to benefit significantly, and we have been talking to a lot of auto component players. They've been quite relieved because 18% duty is something which is very competitive, and that clearly means that more business could shift to India, because compared to China or other countries, the duty structure is definitely in favorable of India. I think broadly the markets have given a thumbs up, as you have seen the indices today. I think then it will be back to business as usual, and I think now with the quarter 3 earnings season also almost getting over, my sense is that you're going to see a lot of expectations that post March, once this deal has been signed, you'll see a lot of FII flows, inflows also coming back. So I think that is going to be now the near-term trigger. I think the markets are clearly waiting that when the FIIs come back with a big bang, and I think hopefully after the January to March quarter, you could see this thing happening. and that eventually will further re-rate the market. So I think it's a good time to accumulate good quality companies. After the Q3 numbers, you get a better sense of the visibility of the top line of the order book. And I think structurally we are positive on sectors like auto components, capital goods, hotels, hospitality, and of course, textiles. So I think it's going to be a cherry picking market. I think go to do your homework and actually get to your buying list very soon.
Okay, but I want to understand from you, how much of the good news is already getting into the price as far as the index move is concerned? And do you really see there is a further upside to what we are at currently as far as the markets are concerned? Remember, for the last 1 year, there have been topsy-turvy moves. We've been seeing extreme volatile moves as far as the markets are concerned. And of course, the markets for a large part have been directionless just because of this overhang. Now that that is lifted, how much of an upside do you still see from the current levels for the markets?
See, I think the bigger move in the index would come only when we get some clear, strong, visible trend as to what the FIs think and how FIs get
Mm.
in the money. Because on a broader index level, Sakshi, I think the market will move only when large capital flows come in large cap stocks, and that is something which we expect the FIs to do. But overall, from the broader market perspective, I think for smaller investors, I think rather than looking at the index, our sense is that the index will move as it goes. But there are many companies which have put out very strong quarterly numbers, have given very strong management commentaries, and the broader market is just waiting. I think the small retail investor has been quite at a loss because most of the mid cap small cap companies have not done well. But I think this is one space where a good amount of alpha can be created, and this is because I can tell you the rise in gold, silver, copper has been so dramatic that now at these levels it looks a little difficult to get an alpha there. So I think equity is the only asset class which hopefully I think maybe from May, June should start recovering in a big way. So I think you need to basically preempt your buying, do a little bit of homework, and I think stay invested. That's the best way to get a alpha from the equity markets.
Right, you really rightly pointed out, Avinashji, that we've actually been seeing, parabolic surge in both gold and silver. Last entire week, we did see wild swings even there. And now, slowly and gradually, gold and silver prices are again climbing back. So between choosing gold and silver and equities, you would choose equities at this point?
Yeah, I think definitely. See, because the alpha to create a better kind of risk upside in gold and silver is now limited. I think at these levels you enter silver or gold. Definitely, gold and silver will continue to be in the limelight. It's not that
Yeah.
we could see any panic sell-off, but I think equities, are at the bottom end of the cycle, and I think that's the time where hardly anybody is interested. Markets always reward investors who actually get into some stock
Sure.
or maybe a sector. When nobody is looking at it.
Absolutely. There's breaking news coming in on your screens now, viewers, as far as gold jewelry related stock is concerned. Kalyan Jewellers has approached the SEBI over manipulation. They've alleged manipulative trading in its stock. They are also seeking regulatory action towards it and an F&O suspension as well. Kalyan Jewellers has requested the futures and options halt up until inquiry is completed. That's what you are hearing from Kalyan Jewellers. 14.5 to 15% higher as far as Kalyan Jewellers is concerned today. And the stock had been buoyant right from the opening gains. And right now, if you see, it's near the top point of the day and about 15 points higher in trade. That's the news that's coming in. Kalyan Jewellers has now approached the market regulator, SEBI, over manipulation. They have alleged that there is manipulative trading that has taken place in its stock. They are seeking regulatory action as well as F&O suspension and requested the SEBI to halt the F&O trade up until the inquiry is completed there as well. 15% higher now for Kalyan Jewellers. All right. That's the quick words there that all of you can continue to watch out for. But viewers, we are also going to be focusing on the India-US trade deal and how it's really going to be impacting the export-oriented sectors at large. We are now joined by Chairman Emeritus of Trident, that's Mr. Rajendra Gupta, and he's with us to share with us how the new reciprocal tariffs set at 18%, the lower duty, and even in comparison to, say, our neighboring nations or our Southeast Asians like Vietnam, Bangladesh, which are still at 19% plus, how does this really augur well for India? Warm welcome to you, sir. Thank you so much for speaking to us on Business Today and India Today. I want to understand from you, first up, your quick reaction on 18% tariff. Is that a good tariff to look at from export oriented companies like yours?
First of all, thank you very much for giving this opportunity. I must compliment the government for making a thing happen after a pause of maybe a few months. The duty which is now imposed 18% is much better than the neighboring countries. And I'm sure the volumes will increase, the bottom line going to get much better. So we see a good thing coming up for our business propositions. Maybe it might take 2 quarters. It may take
Okay.
one more quarter for that. And although in the previous quarters we did not lose much revenue, although we lost the bottom line because we did try to compensate our customers with the duty impact from own pocket. Of course, this might will take a reversal very soon.
Mr. Gupta, how quickly does Trident expect to gain market share from these other competitors, when it comes to the home textile segment in the US, vis-a-vis the other competitors? Now you're better off. So how much more market share
Yeah.
do you expect to gain?
Yeah, you're so right. It will help. It might, we all know that there's always a market week in March, third week in US, where you go and meet all the customers and start renegotiating and negotiating
Yeah.
again. I'm very sure it's going to bring almost growth in business to a large extent. Up to what extent, it is difficult to predict. I think it is not wise on my part to even disclose those numbers because I think today we had a board meeting, and I am very confident that we'll get back to the numbers even much better than before.
What about the margins? You did say that, of course, revenues and bottom line profitability will improve. What about the margin expansions over the next 2 quarters that you're expecting?
Well, it will not be the same as for the previous quarters because you have
Yeah.
to still because but I think the volume will rise and new markets now, not only US, you had FTA with the
US.
European Union. You are also on the verge of closing with UK. The market of USA, UK, Europe, and Australia and New Zealand is also going to give you a more inroads towards the markets. Practically, the expansion of the market, the growth of the market, you get a now a fairly an equal playing ground or a better playing ground for UK and Europe both. So possibly the growth in market is very visible and very feasible. Maybe it might take a while to get back to the same EBIT margins.
Right. If I have to ask you what our Commerce Minister, Mr. Goyal, mentioned, a target of $100 billion for the textile exports by 2030, how does this trade deal accelerate your own expansion plans or lead to new investments looking at the opportunity that's in the offing?
First of all, again, I like to compliment a uh, very well done articulations of the policies and very well closed on the policy. I surely believe that there are very great possibilities in next maybe 12 months to 18 months. The Trident will like to double the capacities in the home textiles as well as the new products which possibly are under the new regime of budgets, which where the budget has given much more leverage and much more support to move into new areas of textiles and new areas of the industry in a similar lines.
Also, sir, if you could highlight for us, over the last couple of months, when there was a lot of trade uncertainty, we're given to understand that some of the US retailers had been destocking for months as well. Are you already now seeing, after this announcement, a surge in forward orders, request for quotes from major US big box retailers following Saturday's announcement?
I must say you had a great study. You made a great study. Possibly what we call the pipeline is dried, and there were also drop in the unit of sales in the U.S. market because they also did made some better. They did try to rise the price. I am sure the mood upbeat with the retailers will really going to push for a larger demand from US customers. But on the same hand, you also had a new market emerging, which is the European Union and UK, where they're also appreciating that in next few months, those are happening and those orders will also come in pipeline. And the opening of the new markets which is as compatible as US, where you had now are more compatible than Pakistan, especially in the UK market and the European market. That is a add-on. Plus, US market pipeline will also see a surge, and how to cope up with that could be a good challenge for all of us.
Fantastic. Last question to you. We still given to understand this is an interim framework. So help us understand what specific non-tariff barriers or maybe technical standards are you urging the government to negotiate into the final bilateral trade agreement to ensure that Trident's products face zero frictions at US ports?
Well, you know, we had such a capable and a very uh, well, the government understand much better than us. I think requesting the government to or guiding the government, I don't think that will become. I'll I will say I will not become that capable. But what is happening? There was a some kind of a stress and easy uneasiness in the past few months, but I think what new thing happened is a really a new hope of growth, multiple time growth happening across the globe.
All right. Congratulations to you yet again, and all the very best for those multifold sort of growth prospects that you're looking at after the deal has been signed with the US and with the EU, and now in the offing with the UK that will open up newer markets for you as well, looking at doubling of your capacities and looking at grabbing all these opportunities. Thank you so much, Mr. Gupta, for speaking to us on Business Today. Avinash ji, let me come back to you, and I want to understand from you, how are you looking at the opportunity when it comes to the textile exporters at this point in time? You heard from the Trident management as well that they are looking to double their capacities going forward, looking at all these deals, newer markets, better competitive edge that we will have in comparison to the other countries at 18% tariffs. How would you look at these companies, and what would your pecking order be here?
No, I think clearly, I think integrated players will do well. I think apart from Trident, you got larger players like Arvind, Gokuldas Exports, Wellspun Living. So I think, a lot of companies are expected to do well in the year FY27. But as the promoter of Trident said, clearly, I think you need to wait for a couple of months. Maybe the fourth quarter may not be very strong, but I think post March, I think from April onwards, hopefully, if the currency stabilizes and if this demand continues to grow, especially from the home textile market, there's a huge demand potential. So, companies like even Indocount Industries could do well. So my sense is that now investors should actually start looking at this sector because a lot of headwinds have gone away. I think now there are a lot of tailwinds, and this actually should start getting trickling down from the May to June quarter. So I think definitely within these companies, maybe Indocount or maybe that Wellspun, Arvind, Gokuldas Exports. I think one should start betting on the larger companies first, and I think then gradually look at the quarter one numbers for FY26-27.
Sure. Okay, got that. Let's also shift focus to the auto space. The first Land Rover Evoque has rolled off Tata Motors and JLR's new assembly line at Ranipet in Tamil Nadu. This 9,000 crore rupees facility will now manufacture luxury as well as electric high-end vehicles, with capacities now planned to scale up to 2.5 lakh units over the next 5 to 7 years. Tata Group Chairman, Mr. N. Chandrasekaran, he has actually said that the plant will produce future models using latest technologies. He's also highlighted multiple free trade agreements as major opportunities for global expansion. So let's first listen into what he had to say.
This plant was conceived to bring the latest Tata Motor models and Jaguar Land Rover models. So it has been created with a production capability for 3 lakh vehicles. And this probably will be the beginning for us to produce, start to produce high-end vehicles, not only in terms of the Jaguar Land Rover products, but also products with the latest technologies. So this is just the beginning. So over the next 5 years, we will bring other models and also new technologies to this facility.
Right. Avinash, coming to you on Tata Motors, both PV as well as CV, especially the passenger vehicles, a large part of the revenue, almost 80%, comes from JLR for the group. And most of this revenue is contributed through exports. Now that the trade deals are done, as Mr. Chandrasekaran was also talking about, how do you see the opportunities unfolding for export-oriented companies within the auto space as well?
No, I think definitely Tata Motors should benefit because, as you rightly pointed out, almost 80% of their revenue comes from JLR. And I think this is a premium product, and I think the new factory at Ranipet is definitely going to improve the value addition, improve the profitability. I think probably you could see starting some kind of tailwind starting from the April to June quarter, because I think clearly with this kind of import duty structure, I think the US as well as the UK markets are very critical for a company like Tata Motors. So obviously, I think you should see better numbers, and I think markets are definitely also looking at a better quarterly kind of run rate, for the year FY 26-27. So I think at this level, definitely one should nimble into the stock. I think a good amount of re-rating can be expected over the next 12-15 months.
Okay. Another top group, the Adani Group, is in focus, viewers, and the group is now set to begin work on its 70,000 crores coal gasification project in Maharashtra later this year. In fact, speaking to Business Today Television's Chetan Bhutani, Mr. Jeet Adani has said that the integrated plant near Nagpur is expected to generate around 30,000 direct jobs. The group is also planning to scale up its aircraft MRO operations as part of the broader industrial expansion. Let's listen in to that conversation.
Big investment that you're doing, sir. What do you have to say about the big Vidarbha opportunity? What is it that you're very fond of Vidarbha?
Especially the coal gasification thing. For the group, Vidarbha is an important place. Historically has been a very important place, and it's a land of opportunity, land of resources, and we are here to be long-term partners to the people here.
All right, before I let you go, I want to ask you about the coal gasification and what about your aircraft operations? What about that, sir?
Aircraft operations
About
of?
MRO and the facility.
We'll be expanding our MRO over here. Yeah. Yes.
And what about investments? How much would you be putting in? And what about coal gasification? So any details on that?
So coal gasification, like I just announced, phase 1 we're doing about 70,000 crores. That is on gasification and downstream. And phase 2 will be probably another of the same amount. And we'll be starting phase 1 soon.
Right. Let's now quickly look at wrapping up the markets first before we go back to Avinashji to take some of your questions, viewers. 25,862, the final print on the markets on the Nifty today, 169 points higher. We are near to the high point of the day as we've ended this session. All the sectors up into the green, barring just about a slight downtake on the IT sector. But look at the banks, up by 0.9%. Look at PSU banks leading that from the front, over 3% gains there. Even the broader markets have done much better than the frontline indices. We've seen over a 2% uptick on the small caps, near about 2% uptake on the mid-cap index as well. But all of the sectors have managed to pull themselves up into the green in today's trading session. Across the board, a broad-based buying, SBI leading from the front when it comes to the Nifty stocks that have gained the ground today. So let's pull up some of those gainers there. SBI 7.5% higher in trade. Remember, brokerage houses are giving about 1,300 rupees kind of targets also. We're already at 1146. Shriram Finance, Bajaj Finserv, those are some of the names that have rallied about 3.5%, 6% You also had Grasim, Titan as all of those names. Adani Enterprises also. You just heard Mr. Jeet Adani speaking exclusively to Chetan Bhutani as well. On the losing side, Power Grid, ITC, ONGC, these were the stocks that dragged about 8-10 stocks that still fell below the flat line in trade. But all in all, it turned out to be a great Monday and a great start to this week as well. Avinashji, coming to you. On the Adani Group, if you could quickly tell us what's your thought process with the kind of expansions that they are now planning to do?
No, I think Sakshi, Adani Group is operating, in all growth-oriented sectors, and I think the kind of investments they are planning over the next, say, 2 to 3 years, I think clearly the markets are looking at kind of a strong growth trajectory from all their group companies. I think within these companies, Adani Ports, Adani Power, or Adani, Transmission, these are companies where a lot of investment has already been lined up. So I think investors need to take a very conscious call that if they want to bet on India, they cannot ignore the Adani Group. And most importantly, profitability wise, these companies have delivered quite well on the numbers. We have been telling our clients to look at Adani Ports because we believe that the India growth story cannot be complete without the ports getting the right and the true potential. So I think from a longer term perspective, one can look at these companies. Next 2 to 3 years, we should see better kind of risk reward happening. But one aspect is that these companies are also extremely volatile. They are favorites of traders. So I think you need to be very careful when you take any position here. Specifically for the longer term, the investment can pay off, but in the short term, the volatility will definitely continue to be there.
All right, we'll take one query from our viewer, Satya from Hyderabad, who wants to know about PSU banks. He says that they have definitely gained today, but will this momentum continue or should I wait to invest? What should I be doing?
No, I think, see, if you look at the numbers of SBI, which got presented last week, a 26% increase on a large base, I think that clearly shows that, the public sector bank pack has been doing very well. If you look at banks like ICICI or for that reason, IndusInd Bank or Axis Bank, this growth rate is significantly better. In fact, in the smaller public sector banks like Bank of Maharashtra, I would suggest that this is also another interesting bet, a very strong growth in CASA, a very strong growth in the profitability. So my sense is that start buying PSU banks in a basket approach. Stocks like Canara Bank, Bank of Baroda, PNB, or for that reason even SBI on lower levels can be a good defensive bet. I think you need to believe in the India story, and I think next 12 to 15 months,
Sure.
with the rate cuts announced, with the economy now getting back into high growth kind of gear, definitely PSU bank should benefit.
Okay, Bhavna from Dehradun asks you, between the gold jewelry stocks like Titan, Kalyan, Senco, Sky Gold, all of them have risen today. Which one has a better potential?
No, I think, see, gold jewelry business has done very well for almost all the companies. If you look at Titan, you look at Kalyan. My sense is that all these companies will do well even in the January to March quarter. The marriage season in January and February is also started off on a very strong note, and the management commentaries have been good. So I think something like maybe a Senco Gold or maybe Kalyan at slightly lower levels could be considered. But I think one should be a little careful. Kalyan has gone up by 15% today. So I think if you want to get into these stocks, it's better that you follow a staggered approach, which will help you actually average your cost better. And I think the risk reward would then get better for the investor.
Fantastic. Avinashji, we have that much time itself on the show, so thank you so much for being with us. With that, viewers, we are wrapping up Business Today show right here. But in case you too have any questions about your investments in mutual funds, your SIPs, stocks or gold-related queries, please do send them to us on the number that's flashing right on your screens. And with that, it's a wrap. Don't forget to tune in at 9 a.m. tomorrow morning to catch all the market opening action with Abha Bakaya.